Hey everybody, welcome to another weekly episode here at REI Freedom Podcast. I'm so thankful that you guys continue to listen to us each and every week. We try so hard to bring you guys a lot of great value so you guys can continue to build your life of freedom through real estate investing. So thank you so much. I'm Jeremy Beland, your host again this week. We have another great guest as always. I'm super excited. Our guest today is Ben Carmona. Now this guy, he's talking about a lot of stuff in his bio, guys. I'll be honest, I don't understand. He's already way smarter in his bio than I am in real life, but I'm really excited to have him on today because he is going to bring some value to you guys. Ben, with over 20 years of expertise, Ben is a leader in 1031 exchanges. This is what we're going to talk about today, guys. Delaware Statutory Trust and innovative real estate investment strategies. Having worked with top firms like Cantor Fitzgerald, Next Point Advisors, and Capital Square Advisors, he brings unmatched experience in acquisitions, finance, due diligence, and product syndication. Ben's in-depth knowledge spans structured 1031 products including TICs, DSTs, and non-listed REITs, private equity, and more. His strategic insight into alternative investments in the financial industry makes him a trusted advisor for clients seeking tailored, well-informed investment solutions. Wow, that is one hell of a bio. Ben, welcome to the show. Thank you so much for being here.
Yeah. Thank you, Jeremy. I appreciate it. And we should probably tell the audience, I'm going to lean in really close to the camera because I'm having tough time hearing Jeremy. So you're going to see my mug right up there in your face.
Microphone like a rock star from
there you go.
I used to love Axl Rose. We're having some technical difficulties. As in life, we're going to overcome all these obstacles, and we're still going to put on a great podcast because Ben is the real deal. He's got a lot of information to share with us today. But Ben, before we get into all your expertise and talk 1031 exchanges and Delaware Statutory Trust, can you tell us a little bit about who you are and how you got to where you are today?
Yeah, absolutely. And again, Jeremy, thank you. Great to be here. I appreciate the time. So I live in Orange County, California. I've been here for about 18 years. I'm married, 2 kids, 8-year-old and a 5-year-old. I went to school in San Diego State at an Aztec. And, I was kind of raised in a real estate investment family. My dad was in the foreclosure business. He's a private lender today. And I've always wanted to be in real estate in some capacity. I didn't know that I'd end up, I'm a financial advisor. And so I advise clients, but not your normal financial advisor doing stocks and bonds and mutual funds and annuities. I'm all about, real estate syndications, passive investments. And so right out of school, I was introduced to this world by happenstance, and I've been here ever since. So I've been in this industry, and I would say it's a niche industry for just about 20 years now.
Well, that's awesome. I'll tell you, I'm up here in New Hampshire, and it is a balmy 22 degrees today. So I envy you being in Orange County, California, because I can see in your window in the background. I'm like, man, that looks really nice. I haven't seen green in months. I want to see some green. And I'm actually speaking at the Orange County REI virtually. Do you know Karen Hall? Karen Hall, Karen. She runs. She's a local investor, but she does a lot of self-directed IRAs. She's the president of the Orange County Real Estate Investing Association. So I'm doing a presentation for her coming up in April. So I'm super
down
excited
here.
About that. No, I'm doing it virtually. But I was in LA 2 weeks ago doing a presentation for the LA County REI, but it rained, and apparently when it rains, everybody stays home, so we didn't have the turnout we hoped for, but it was still nice to be out in LA. I just wish I didn't bring my New England weather with me, but apparently I did.
Yeah.
So, Ben, let's talk about 1031 exchanges today in the Delaware Statutory Trust. If you could explain what both of those things are before we get started, that'd be greatly appreciated.
Absolutely. It's a good place to start. So, 1031 exchange, if you're a real estate investor, you should absolutely know about 1031 exchanges. It's one of the oldest codes in the tax code. It's been around for 100 years, and arguably the most powerful tax code for real estate investors. And essentially the IRS under IRC or Internal Revenue Code 1031 allows you as an investment property owner to defer paying taxes on sale as long as you use the proceeds from sale to buy other replacement property, right? And in the interest of time, I won't go into all the minutia, but in a nutshell, that's what it does. It allows you investment property owners to sell an investment property. As long as you buy another investment property, you can defer paying taxes, right? And so you think about the folks, real estate's a great way to create wealth. And that is absolutely one of the codes that allows you to get there. Because you think if, Jeremy, you buy property, today or 10 years ago, it appreciates, you sell it, you do an exchange, you defer the taxes, right? So you keep that whole lump of money together. You keep doing it. And then one day, you pass away and your beneficiaries will inherit that real estate or those assets at a stepped up cost basis, right? So all the millions and how many you've deferred all these years, you wipe them out and your kids get it at that stepped up basis. So that's the power of the exchange. One thing I will say, what defines investment property? And you'll see in the code, you have to sell your property and buy like kind property. And folks often think, well, okay, I'm selling a multifamily, I have to buy a multifamily. That's not the case, right? It's investment property for investment property. So you can sell land and buy an apartment. You can sell an apartment and buy a hotel, and so on and so forth. So that's the 1031 exchange in a nutshell. Now, the IRS, has blessed us with this opportunity to defer taxes, but they don't make it easy. There's timelines, there's rules, regulations. And so there's a lot more to what I just said, but in essence, that's the power of the exchange. In Delaware statutory trust, and again, we could spend 2 hours talking about all this. So you have the code, IRS 1031 exchange. Then you have DSTs, Delaware statutory trust, which is just a form of ownership that is conducive for 1031 exchanges. So I'll take a step back before I describe it. Our clients are folks primarily that are baby boomers or seniors. They're 60, 70, 80, 90 years old. These folks have worked all their lives hard to build their portfolios and manage them. They're tired of active management, and they're hoping and dreaming and praying of a solution that will allow them to sell their property, defer paying taxes via 1031 exchange, and get into another vehicle or structure that relieves them from the active management and provides them that stable, predictable monthly income. That is the premise, the overarching premise or benefit of DST. Because, and I'm sorry I'm jumping around a little bit. Let's just take 80-year-old Mrs. Smith. She's owned this, triplex for 40 years. She doesn't want to manage it anymore. And so if she sells that property, what are her options? She can do a traditional 1031 and just buy another property, but that doesn't solve her problem, nope. Right? She's still got to manage it or hire property management. Or if she sells it, she's worried that maybe she can't complete the exchange, and that's going to create a major tax situation for her, right? So that's what we're dealing with. The DSTs solve that problem. So a DST is a trust. It's an entity. They were created in the 80s. And it's a structure whereby you have one trustee that manages the trust on behalf of up to 499 beneficial owners. So when you take this trust and you apply it to real estate, it creates a fractionalized ownership situation, right? Where you get a lot of investors own real property in this structure. And so what you have in my space is we'll call sponsors, right? Syndicators, but big institutional guys, Cantor Fitzgerald, Ares, Apollo, Starwood, you name it, there's 50 of them. They go out and they'll buy a $100 million multifamily project in Dallas, Texas, right? 400 units, 95% occupied, stabilized, income producing. They turn around and they offer that to retail investors like you and I. And so if we're doing an exchange, or if you're, 80-year-old Mrs. Smith that's doing an exchange, she doesn't have to worry because she knows that if she sells her property, she can exchange right into this syndication that will satisfy her exchange. And then the institution is going to stay on and hire the property management. They're going to provide the asset management. They're going to send out monthly distributions. They're going to send out quarterly performance reports, end of year tax returns. So the DSTs provide a turnkey, they are a turnkey 1031 exchange replacement property solution. I'll say one more thing and then I'll stop, Jeremy. I know I've been babbling. Going back to the up to 499 beneficial owners, right? Because you can have so many investors in these, the minimums are low, 100,000, 250,000. And so little Mrs. Smith, maybe her property's $2 million. And I'm selling in Orange County, or she's selling in Orange County, LA. Well, I can take that money and I could break it up many different ways. I could put Mrs. Smith 200,000 into this multifamily in Dallas, 200,000 into self-storage in Raleigh, North Carolina, 500,000 into a medical office campus in Orlando, Florida, so on and so forth. So I'm able to reduce risk, relieve them of management responsibilities, more times than not increase the income that they're earning. So it's a beautiful structure that's widely unknown, frankly.
Yeah, I would say it's definitely unknown. I've been trying to educate myself for a long time in the real estate space, and I'm familiar with 1031 exchanges, but I've never heard about the Delaware statutory trust.
Yeah.
That's amazing. So in her situation, like the 80-year-old lady who wants to sell, she doesn't have, if she wants to not have to pay those taxes and get hit with the capital gains hit, she can then put it into the DST, which allows her, as you said, to have multiple places to get income from, which, helps reduce her risk. But typically with a 1031 exchange, you have to find at least a property or properties that are equal or greater value, right? So
Yes.
if she's selling for $2 million, she would need to find a property or properties that equal that. And again, that doesn't really help her. But it seems like the DSTs is a way to just get around all that. They just basically take your cash, invest it in multiple options, and then give you the returns on that. And if you're 80 years old, I'm sure those returns are very helpful. That's pretty amazing. I've never heard about any of this before. This is kind of mind-blowing to me.
Yeah, no, and that's why my job is so fun, Jeremy. Again, our business is fueled by the aging of the population, right? Baby boomers, seniors are getting older. They've acquired all this wealth. A lot of that wealth is in real estate. And this is a major underlying issue they don't want to manage. And these folks have also, from a return standpoint, look, if they bought it for 500 grand 30 years ago, it's worth 4 million today. Most of the investors or folks, they haven't ratcheted up rents. I mean, so they're earning 1% to 3% income on current values. Many of them are fully depreciated, right? So there's no more sheltering through depreciation expenses, and they don't want to manage. And I can come to the table with a solution that can really improve their lifestyle and their life.
Sure.
So yeah, it's a great product.
With the DSTs, let's just say, after a few years, you need to pull that money out because, I don't know, something in life happens, right? A life event happens. You need to pull that money out. Are there any complications or restrictions of pulling that money out at that time?
Thank you so much. I was so excited about talking about the benefits. I haven't introduced the limitations or the risks, if you will. So by and large, DSTs, well, I mean, not even by and large, they're illiquid. They're illiquid, right? So if you get into a DST, you have to look at it as a 5 to 7 year kind of hold, right? It could be a little longer, it could be shorter, but that's kind of the average right there. So anybody that I'm talking to that may need liquidity, down the line or needs it today, you just take some cash off the table, pay tax on that, and you can exchange the balance. You and I, younger, again, these cater to older folks, guys like you that are shaking and moving, you're still doing your thing. You probably wouldn't have an appetite or a desire to get in something like this because you can't move in and out, right? You're totally passive. You're putting your full faith and trust in the sponsor company to manage that asset on your behalf. And that's really where we, as Perch Wealth, come into play. Prior to starting my company, Perch Wealth, advising clients, I spent 15 years on the syndication side. So I was, building these investments, if you will. And now I'm advising as to which ones folks should go into.
Well, it's great because that leads me to my next question because, if you're 80 years old, you don't know how to vet any of these companies, right? So going to a company like your company that you provide, you're doing all the vetting for them and putting them into a safe space that meets their needs, correct?
100%. And that is the problem. I will say that's the issue with our industry, is that, look, I could have sold Mrs. Smith on the prospect of transitioning to a DST, right? And, excited. But then you get to this market and it's highly fragmented. There's very little transparency. And so, there's not a Standard & Poor's or Moody's rating agency stamping this one as being good and this one's being bad. There's none of that. And so, you really need to be dialed in on the industry. There's lots of options, and that's exactly what we do, is underwrite the sponsor, the investment strategy, the viability of the investment strategy going forward, so on and so forth.
I love that. Now, going back to 1031 exchanges, a lot of us who get into the real estate space, right, we may have not come from real estate family or pedigree, and we're really hoping to build generational wealth for our family, right? We're trying to, maybe we didn't come from any money. Now we want to provide it for our future generations. And what you mentioned earlier with the 1031 exchange, now I always understood it that, hey, every time I want to sell a property, I can not have to pay those capital gains taxes and defer them by buying a property of similar or greater value. But you're saying after I pass away and my children inherit the property, all those taxes are forgiven at that point, so they inherit the property tax-free, and they don't have to pay any of those capital gains taxes that have been deferred for all those decades.
Affirmative. Yep. Swap it till you drop, and then you get to step up in cost basis. Yep.
I mean, what better gift could you provide your children and grandchildren for generational wealth rather than, income-producing, equity-producing properties that have no tax hits when you die?
Amen. Right? Yeah.
So, with your years of experience, right, because a lot of the listeners on my show are, 20, 30, 40-year-old guys like myself, who, some of them are still working in corporate America, or some of them have escaped the rat race and are building their life through real estate, or, want to, or some variation thereof. Knowing what you know about the DSTs and 1031 exchanges, what would you give for somebody who's relatively new and getting started into the real estate space, and how they could benefit from it for future years to come? Is there ways for somebody to do you just recommend just buying a property and every few years, once you get the equity, sell it and keep leveling up like Monopoly? Is there a way to use DSTs early on in your life as a, maybe part of your income to, have some diversification early on? What are some suggestions you would recommend, knowing with what you know today?
Yeah. Well, for, the audience of 30, 40, I mean, I'm 40, I'm 41 too. Look, my parents are in DSTs, right? It makes sense for them. So I would say from a DST standpoint, maybe you can help your parents, right? That have this dilemma if they do. So the DST, other than if you're a broker or a realtor, being aware of DSTs is a huge benefit, right? Just think, instead of just calling Mrs. Smith and trying to get a listing, like every other broker, you come to the table and say, no, I'm not only calling, I hope I can list your property, but I have a solution for you, Mrs. Smith, right? So being aware and knowing enough to be dangerous to introduce the solution would be helpful for that group. And then, and we don't have time to get into it, but DSTs fall into a broader group of alternative investments, right? So we also offer clients that I do exchanges for. They come back and they say, Ben, or some of them, we have cash. I'm over allocated in stocks and bonds and mutual funds. Like, I don't want to see another repeat of 2008. Is there what can I do to spread my risk even further? And that's where, alternative investments, not only just the 1031s, but there's private real estate funds like you may, put together, Jeremy, for your investors. That would be for the 30 and 40 audience, the value add, knowing about the DST, and then just being aware of or looking into other private investments you can build your own portfolio with outside of stocks and bonds, because I think it's important.
I love that. All right, now going back to 1031 exchanges, when I think of 1031 exchange, I think of that multifamily, right? That triplex or greater. Now, what about a house flipper? Can somebody renovate a house, sell a single family, and when they go to sell it, rather than paying the capital gains tax, can they 1031 exchange that into their next flip, as long as it's equal or greater value?
No, I mean per the code or the guidelines, if you can't, you're not eligible to do a 1031 exchange if it's in your primary trade or practice, right? So if your practice is to be a flipper, you're not eligible now. Do investors do that? Sure. The rule of thumb being that actually I'll leave it there. I don't want to give advice on something that. Yeah. The rule of thumb is no, you cannot be doing that as if it's your primary trade.
Well, that's good information. That's all I needed to know.
Yeah.
So, obviously, 1031 exchanges, as you mentioned, they have rules, they have restrictions, they have guidelines. Some of it is, basic information that some of us may know, but I'm sure, as you said, there's a lot of stuff in the minutia that can get a lot of complicated. And when you're dealing with the IRS, the last thing you ever want to do is make a mistake, because they're not the people who get happy when you make mistakes with their money.
That's exactly right.
So with a 1031 exchange, if you're a real estate investor buying and holding small or, just rental property, single family to larger multifamilies, and you're looking at 1031 exchanges, it seems like you would be doing yourself a disservice by not hiring a professional to guide you through these transactions.
Yeah, I mean, especially what I do for sure, because they're on the, there's syndications you have to look at. But even through going through a 1031 exchange process, I mean, your broker or realtor, if hopefully they're somewhat familiar with the process, but if not, absolutely, you don't want to mess around, right? It can be a huge mistake.
So, Ben, is that your company offers that service? So if I said, hey, listen, I want a 1031 exchange out of this 4-unit because I have an opportunity to buy this 8-unit, and, I want a 1031 exchange that equity, is that something that you provide for people?
We're big on education, and anybody in the audience can call us or call me, and we're happy to provide that background. Anytime, for sure.
All right. And so with the DSTs, you say there's a lot of alternative investments. Can you give us a little bit more of a range of what some of those investments are?
Right. So I'll just I love oil and gas mineral rights in the Permian Basin today. I don't know, mineral rights aren't widely known either, but it's a real estate investment strategy where you can invest in the Permian Basin, which is the largest or the oil and gas mecca of the world, and you can own the mineral rights, beneath the surface. And so I think that's a great investment today. We also have, like private credit or private lending groups. So, it's hard to get financing through conventionally or through the banks today. There's lots of companies or real estate operators that need debt. Where do they go? They go to private lenders. So this fund that we offer, that we're recommending, it's a compilation or diversified portfolio of a bunch of different loans that this sponsor has been lending, right, to these borrowers. Anything that's unique for the most, right? They're private. They're not traded on an exchange. They're income oriented. They're different than what you'd see in the traditional basket of investments. If that makes sense.
Exciting. All right, and Ben, what does your company do outside of DSTs? What else does your company do?
Yeah, so we do. Well, first of all, so I have a business partner. We have 11 other advisors nationwide. We're all over the country: Arizona, Texas, California, Ohio, Georgia, probably a couple more. And we work, we're financial advisors, right? So we're a securities license. We're not your traditional advisor, which I explained on the front end. We help folks find source replacement property solutions for their exchange. We help them, those that are looking to diversify their portfolios, invest in a couple of these options that I just mentioned. And then we also, like tax mitigation strategies. At the end of the year, if you've made a lot of money and you're facing a big tax bill, we have investment strategies that could really, lower or mitigate those taxes. That's what we do.
That last one spoke very loudly to me. Awesome. Ben, obviously, a lot of great information today. Really appreciate you being on the show. For people who want to learn more about what you do and get in contact with you, what's the best way for them to, just do that, to reach out to you and get contact with you?
Absolutely. So I'm going to give you my cell phone. You feel free to, call me direct, 818-269-4972. Our website is Perch Wealth, PERCH wealth.com. And my email is bcarmona@perchwealth.com. That's BCARMONA@perchwealth.com.
Awesome. We'll make sure we put all that stuff in the show notes as well to make sure people reach out. I mean, it's just so much great information. The DSTs is just kind of mind blowing because it's nothing I really ever thought about. And, and as I'm getting older in age, as much as I'd hate to admit it, it's nice to think of that down the road. And I could think of some people in my circle in my life who could benefit from that. And that's something really cool that I learned today. So I appreciate you sharing that. Awesome. So we'll leave you with this, Ben, so if any, I guess you already kind of gave us some information about people that are my age. Knowing what you know about everything that you've done in real estate, because I know you talked offline that you've done some syndications and everything else. What is one piece of advice you could give to anybody listening to my show with anything to do with real estate investing based off of your experience and your expertise and your knowledge?
I think, I think this applies to everything in life. You have to work hard. You got to be a student of the game. You got to work hard, right? I'm not, my bio, it sounds fancy, but I'm not an Ivy Leaguer either. It's sheer hard work, right? If you have a passion for it, you got to dig in. You got to be a student of the game, and you got to work hard, and things will happen for you.
No easy button, no shortcuts to success. Just good old fashioned hard work. I love it. That's what I pride myself on too. Ben, thank you so much for your being on the show today. You're a great guest. So much great information. Thank you so much.
Thank you, Jeremy. It's a pleasure. Appreciate it.
All right, guys, that wraps up here another week at REI Freedom Podcast. I strongly recommend that you guys reach out to Ben. Again, the information will be here in the show notes. If you guys want to learn more about 1031 exchanges or DSTs, DSTs being the big one here today, I strongly recommend you reach out to him. Listen, guys, building a life of real estate freedom, a life of freedom through real estate investing comes in a lot of different ways. And as you get older, and if you're going to be like me and my wife, Shelly, we plan on living to 100 plus. DSTs look like they're going to be a tool for us down the road. So make sure you guys learn more about that. And until next week, guys, we'll see you. Work hard, just like Ben says. Work your butt off. Don't stop. Build that life of freedom. We'll see you on next week's episode. Have a great week.